Hey folks, Dan Frio here, the rate update. Today is January 14th, 2022, TGIF. We got some good news in today. Well, maybe not so good news. In retail sales, it was down. Is this a reversal of inflation? Don't go away. We're going to talk about that next. Okay, so the headline news is retail sales, how they come in or how they finish the year. Take it away, Rick Santelli.
Our first read of 2022 on how retail sales closed out December. We're expecting a minus number on headline, but it was a great year for retail sales. The monthly numbers are out minus 1.9%. That's about minus 1.8% more than we were expecting. And if you look at X autos, it's still under pressure, more pressure, minus 2.3%. Strip out auto sales and gas sales, minus 2.5. These are big numbers down. And if you look at the retail sales control group plugged into higher economic data points, that's minus 3.1. That is huge. Now, I do warn, okay, that these are big year-ending negative numbers, but for the year, it's not necessarily about how December was. It's how many shoppers, of course, spent money earlier in the year. If you look at March, for example, of last year, big, strong gains. So, yes, we ended with a whimper, but overall, it was really how they spaced out sales and how many consumers, of course, heeded supply chain issues and shopped early.
Okay, so let's extrapolate what Rick Santelli just went through. And what I want you to pay attention to is some of the things, or two things he said, is this is the December numbers were 1.9 less than what we anticipated, or worse, okay? So that means retail sales are down, they're declining. But then he said, well, back in March, remember how overheated things were? Well, what was happening back in March? You had forbearances, you had excess stimulus, and you had a lot of student loan deferrals, okay? So again, if you have excess money and no debts, as a society, we don't save, we're spending it. Now we're starting to see a little reversals. People don't have that excess money and they're not spending or they can't spend it. That's going to be great news for inflation. Okay. The next thing is I want to show you what's going on with the 30-year MBSs. I'm going to refresh this because this system doesn't refresh. It's volatile as heck today. But the MBSs are right now at down 13. We might have a rate increase here shortly. I'm going to monitor that. And if we have any crazy moves today, I'll send you out a special alert. So right now we can see that the MBSs are down 13 based on that news. Now, where are we with rates? How did they open the day? Okay, so I just want to be clear on this, guys. These are not my rates. They're the national average that's compiled by Mortgage News Daily. So let's go across this real quick. I'm going to go through the first one in a little detail with you so you get it. So the 30-year fixed rate started the day at 3.57. You're going to see the plus 0.05. That means it's 5 basis points higher than the day before. Okay, so rates are on the rise. You can also see the little caption bar down below, and it gives you the 52-week range. The ranges from 2.75 to 3.64. You can see we're a little bit off the 3.64, so that's good. A little stability is coming in the market. So let's go across the board here. We got the 15-year fix at 2.85, up 3 basis points. The 30-year FHA/VA is 3.2, up 1 basis point. The 30-year jumbos at 3.23, up 1 basis point. And the crazy volatile 5/1 ARM is at 3.6. It's down 2 basis points. Okay, so that's what's going on there. But to expedite my process, what I'm going to start doing is condensing everything into one page, because people are like, Dan, if you posted a video for 6-7 minutes, I'd watch it every time you posted. You're 15-20 minutes. I don't have the time to do so. So I get it. So I'm going to start posting this to show you everything in one nutshell here. And then also different techniques or different tools we're using to help us explain more to you are things like this. I'm not going to require you guys to go out there and do this. These are the tools that we use in the background to help us predict what the future is going to bring in regards to mortgage rates. Okay, so if you're like, hey, Dan, I like what you're doing. I really like how you're following the markets, your knowledge of the markets, your knowledge of the products and so forth. How can I work with you and your team? Well, it's pretty easy. You got 3 options. 1, call us. That's probably the simplest and quickest way. If you can't call us, schedule a meeting because your situation is unique to you. Okay. So you need to make sure you talk to us so we get all the reasonings behind everything. So when we're putting you into the program that we think fits best for you, we have all the facts. The next thing is if you're like, hey, my loan should be pretty simple. I know you shop over 130 lenders for me because Dan, you are now one of the largest, or you joined the largest mortgage brokerage in the country. I know you have the tools and the products to help me out. All you got to do is hit the apply now button and you're on your way. So that's it for today, guys. Thank you so much for watching. I got some special news I'm going to break this afternoon to let you guys know maybe I'm on some special show this weekend that you guys can tune into. Just a hint. So thanks for watching. Please, if you like my content, give me a thumbs up, subscribe down below. Love to hear from you. Take care. Have a great day.